Nigeria's inflation has been on upward trajectory since the beginning of 2020. Now, in January, the headline's inflation rate increased to 12.13%. Main upward pressure came from food price inflation, which also remained elevated for clothing and footwear, miscellaneous goods and services. In February, the consumer price index accelerated to 12.20%. The figure was 0.7% higher than the amount recorded the previous month. According to the report, the rise was caused by increases in prices of bread and cereals, fish, meat, vegetables, and oil and fats. The annual inflation rate in Nigeria rose for the 7th straight month to 12.26% in March of 2020 from 12.20% in the previous month. It was the highest inflation rate since April of 2018, largely driven by the effects of border closure, the new VAT, and the coronavirus pandemic. The figure is the highest in more than 2 years as food inflation sub-index keeps rising. Salary earners, especially those on a fixed income like minimum wage, are finding it difficult to get more items as purchasing power drastically reduced. This may also force the central bank to increase the country's interest rates in order to moderate the spike in the short run, putting pressure on the loan facility. Analysts expect exchange rate pressure and supply chain disruptions with trade partners to impact domestic consumer prices in the coming months as a result of the COVID-19 pandemic. Now, on the monetary side, the monetary policy side, the Central Bank of Nigeria kept monetary policy rates unchanged. It's been at 13.5% from its last meeting. According to the CBN Governor Godwin Emefiele, the MPC felt that tightening would result in reining in the rising trend in inflation and that it would also support reserve accretion. However, this would reduce money supply and limit DMB's credit creation capacity, thus resulting in increasing the cost of credit with adverse impact on output growth. Meanwhile, the Central Bank of Nigeria has deducted a whopping 1.4 trillion naira from the banking sector. That's the cash reserve ratio requirement, as all Nigerian deposit money banks and merchant banks failed to meet the 65% loan to deposit ratio at the end of March 2020. This is coming at a time when the COVID-19 pandemic has hit hard on the economy and the financial sector. Now, what this means is that banks may go hard on their debtors, despite CBN imploring them to consider loan restructuring for their customers. It means that banks are under pressure as interest income, a major earning source, will be affected as they have fewer funds to invest and lend. Now, many analysts have predicted that a GDP growth above 1% for the first quarter of 2020 will be a miracle for Nigeria's all-dependent economy. The impact of the coronavirus crisis is expected to kick in and slow the growth of Africa's largest economy, an average of 1% for the first 3 months of 2020. This would be a growth decline of 1.5 percentage points from the country's Q4 2019 expansion of 2.5% and will also be lower than the 2.01% reported in the corresponding quarter of 2019. Now, I have the senior economist with SPM Professionals, Paul Alaje. He joins me now via Skype from Abuja for more on this. Paul, it's great to have you join us this Monday. Paul, thank you very much for joining us on the show. Paul, if you can hear me. Hello, Paul, can you hear me?
I can hear you.
Okay, I think we are getting connected to Paul now. You can hear me. Paul, I can also hear you here. If you can hear me clearly now, let's look at inflation rates. This has been the highest since 2018. How does it come to you? as an economist who's been following the trends?
Well, it's not so surprising. Recall that the inflation rate released was for the month of March. It's not the April inflation rate. And if you look at what has been happening in the economy before the pandemic was introduced, it's expected that inflation will be up, particularly because of food inflation and also urban inflation. And when the National Bureau of Statistics released the report, it was not a surprise at all. Even though it was marginal increase in the rate, it's still very high because we are still above 12% as we speak.
So, Paul, looking at it now, we see the impact on food, basically food at the moment, and which is very important considering the lockdown and the effect of the COVID-19 pandemic. What do you see playing out? There were exemptions for movement of food produce across the country, but we still see a negative effect one way or the other, assessing the figures.
Now, first, this inflation has not reflected, the inflation rate release has not shown the impact of COVID-19. It is the report we'll see next month that will show what effect of COVID-19 is on inflation. And from all indication, we might be having high inflation rate, even though it's a bit confusing, because for the first time in a century, governments of the world have decided to freeze both demand and supply at the same time. There is demand shock, there is supply shock, there is entire market shock, which of course will have implication on inflation, particularly food inflation, because people could only go to market, say in some places twice a week, in some places most of the time, and in some places once a week. So if people cannot go to the market to buy, when they want to buy, there is a lot of shock. On the other hand, government is also distributing food items to people. So people have commodities, there is no demand to buy it, and people want to sell, and they are not allowed to sell certain products. So how do we calculate inflation for construction when all construction workers are currently at home on lockdown? How do we calculate inflation for electronics, which includes mobile phones, which includes laptops, etc., when those who produce them and who consume them have been disconnected? We will wait to see what the figures will be. But of course, beyond inflation, if you look at the real economy, we can only say that the policy of governments around the world is telling really hard on employees of organizations and also employers of organizations at the same time.
Paul, before now, we've had discussions around border closure, which still remains. VAT on the 7.5%, that's from 5%, and all of those new policies that we're in even before now. How do you see that playing out with the challenge that we face with the reality on ground?
For food sector, largely exempted from food inflation, those who are supposed to remit VAT, they are not even at work because they've been largely locked down in their respective homes. They are not allowed to go to their business. And I can tell you that if FIRS, as the case may be, we get filing, it will be less than 10% for people that will file. Most people will file new returns because in the real sense, people have not been doing business, particularly Lagos, which of course is the epicenter of coronavirus. And coincidentally, it's also the economic heartbeat of the entire country. So when you compare Lagos and you see what is going in Abuja, the seat of power, where people have also been locked down, and you consider the policy, executive order signed by Governor Wike, which of course is also a major nerve center of Nigeria. What is going on in Kano, which is the region's strongest, and Kaduna, you will know that, of course, people will not expect so much in terms of government revenue. So how will this impact inflation going forward, particularly for month of April that we're getting into? Food inflation, like I said, there is not so much we should expect. Number may remain flat because there is not so much activity, but that does not mean people are going to live better life. People are going to rely so much on what they have. Because of government intervention, it may make the number to remain flat, as we have seen a lot of food items being supplied to some communities for free, even though it's not sufficient. And also, when it comes to other policies of government like border closure, the major challenge, for instance, which government have championed and done a lot with, is rice production. But the output from our farms is still not sufficient, as paddy scarcity has make rice demand not to be sufficiently met in terms of supply of it. And I hope that in the coming period, I understand why government shut the border, particularly because of rice production, but we also need to double our effort in terms of output. If not, price in that area will continue to increase. And if you go to some market today to buy some commodity in supermarkets, which has not been on lockdown, some markets that have been exempted from purchase, you see that prices have skyrocketed. So all of these will show that general price level has increased. But what happens to demand? Are people really buying it? It is not just to sample price. It's also to see if those goods in terms of production have reached the final consumer. So if consumers have not demanded for them and government is saying we are going to intervene, or we are already intervening in terms of consumption, so the number of inflation, even if it will increase for the month of April, it may be marginal, but that will not reflect the true picture of any country. It will not reflect the true picture of any country because there have not been real monetary activity in the economy. They have been shut down on both demand and supply. So the real way to measure economic activity in April will be what is unemployment figure say. And I can tell you that, of course, we don't need economists to even tell us that more and more people have joined unemployment bracket. Countries that Nigeria have copied in making policy environment to save life, which is very important, I must emphasize, which is very important, have recorded more and more unemployment rate from UK to America, etc., etc. They've reported more unemployment rate. And I'm not surprised that Nigeria will record the same.
Paul, I want to look at salary earners now. Let's talk about people earning minimum wage and expect salaries to come in. What's your assessment of purchasing power at this time? Because you're talking about government even giving some palliatives and also making demand be on the lower side. So what do you expect? What are salary earners? What do they tend to face moving on as we move out of the lockdown? If there's going to be an extension, we don't know at the moment.
What salary earners, the fate of salary earners will be in the hand of the organization. As I speak to you, reports as at yesterday show that one of the major airline companies in Nigeria have slashed salary by 80%. One of the commercial bank report also has that slashed salary by 50%. Another one, commercial bank, has slashed salary by 70%, which means that they are saying you are not working effectively, we cannot also pay as before. So what is the fate of small organizations who don't have reserve, people who live by the day? Of course, it's going to be no work, no pay for most organizations. And it is not that those organizations don't want to pay, it is because of policy that says you should stay at home. It is not because government don't want people to go to work, it is because of an enemy fighting the nation, and not just Nigeria, countries of the world, but nobody can see. So this enemy, of course, we know its name, is the novel coronavirus. So how do we defeat it? That's left in the hand of health professionals to tell us how to combat it. But what is the implication on economy, particularly those who are employees of government? It's going to be perhaps no salary for some people, depending on capacity of the organization. Some organization is even to say they want to downsize, reduce number of people because sales has sharply reduced. But for those in essential duty, it's good day for them. Those in pharmaceuticals, those in medicals, those in production of water, particularly rice production firm. Government, state and federal seems to have unusual love for purchase of rice and sharing it amongst their people. So talking about lockdown, I hope that government will sincerely reconsider policy around lockdown so that we will not continue to have more and more people wallowing in abject poverty. When you look at the economic strength of Nigeria, you see that it's centered around oil. So on one hand, government needs to generate revenue, and government have carefully maneuvered that by increasing what is expected, by reducing, I beg your pardon, what is expected from crude oil from $55 per barrel to $30. And as we speak, we still not been able to have that. And organizations, economists around the world is even projecting that if we don't overcome coronavirus by June 2020, economic quagmire may be sustained around the globe, of course, which may affect Nigeria to second quarter of 2021. That means Nigeria may be in recession to second quarter of 2021. So what do we have to rely on? Local economists, which depends on finance sector and some other sector. But finance sector, 30% of their loans is also given to people, to organizations in oil and gas. And 24% of that, according to report shared by CBN in third quarter 2019, 24% of that loan is non-performing. approximately 6.125 trillion naira is facilities that have been given to them as at the 2019, I think January 2019. So how do we build an economy if we don't allow small businesses, because of imminent economic quagmire that awaits the country, not because people don't want to work or perform, but because, of course, there is disruption that have caused both demand shock and supply shock at the same time. And this is unprecedented. We understand if we have financial crisis, how to intervene using some formulas and methods used in 2007, 2008. We understand if we have global oil shock, as we had in 2017. We understand when we have the exchange rate issue, as we had not too long ago. But what we have now is an health issue that have affected financial sector, that has affected global oil prices, that's affected economies, that's affected lives, that's affected production, and so on and so forth. So this is a desperate period, and we of course have to apply desperate measures.
Paul Alaje, thank you very much for joining us this Monday as a senior economist with SPM Professionals.